starts, let me just say something. You see the whole thing of I'm no longer. I want to just stop. The whole thing of this market thing. Most of the people get confused is they don't have a plan on how to trade. I started trading forex in 2023. That was when I started, and I can see that I came up fast, like because I had a plan that I was literally. If you open my phone, I have more than 100 plans on how to trade $100 account, $200, $500, $1,000, even 100K. When I never even make 100K back then, I had the plan on how to trade $100,000. The thing that most people don't have is that plan. Coming out every week, writing out how much you want to fund. Most people fund any amount they just see. If money enter their account, they have funded it in their account, in their trading account to trade, and they'll end up losing it. Why do they lose it? Because they don't have a plan on how to trade that amount. For each deposit that I've made on my account, there's a plan on how to trade that deposit. For example, now I'm trying to scale up to a zone where I start making $50,000 to $100,000 per trade, and because of that, my risk has significantly increased. So because of that now, I actually wrote a plan on how to trade it. Every single thing that I trade and everything, all the plans are written down. This trade I took here now, the plan for this particular trade was down already. My plan was get to 10K, this 7K inside, and target 1 is to 6 minimum. That is, my plan was to get this account to $50,000. So I can start trading with that $50,000, risking 10% per trade, and then averaging at least 30 to 40K per trade. That is my whole plan on this thing. But before you can actually start trading, you need to make all these kind of plans. Have your plan on how to trade the account. That's what separates a profitable trader from an unprofitable trader. Planning. Yes, you have the technicals right, but you can enter, and the only reason your psychology can keep disturbing you is because, number one, the capital you funded, you just funded it easily. And if you fund an amount now, instantly, without planning it, trust me, you're either going to lose that money very fast, or you can get lucky and then make profit on it. But that amount that you just funded out of funding, say, because it entered your account, is way different from something that you wrote down on how to trade, fund it, and then follow that your plan accordingly. This account that I'm trading now, I planned this thing before I funded that amount. And the main thing is that I made this money from a $100 trade. It was $100, I made 6K, and then I took out the 1/8 and funded, because my whole plan was to fund $2,000. And at the end of the week, get to 50K just in 2 trades. That was my plan. As of last week, this was the plan. Pay attention to it. $2,000. First trade, risk 50%, 1,000. Get the account to 8K. Second trade, risk 7K, and get the account to 50K. This was the plan. This was what I was up to. That I took a trade and I used 40 lot size on GPGPY. My psychology will have not yet gotten accustomed to that amount, so I made some few mistakes and I didn't complete my phase 2. But if the phase 2 actually worked as planned, I would have ended up at $50,000, which I will still do again, and it will work, and I will show you guys in the group. Now, after that, I will keep 50K as trading capital. First trade, risking 10% of 50K is $5,000. On average of 1:6 risk to reward ratio, that's 30K profit. Now, you check my trades out and see the trades that I took last week and see the risk to reward ratio on those trades. This trade is what? 1:12 risk to reward ratio. If that 50K capital was there and the first trade I took was to raise that 10%, which is that $5,000, at 1:12, how much is that? $60,000 profit. Now, the second trade here is about what? Another 12 risk to reward ratio. So with that $60,000, if you add it to the 50K capital, how much will it be? $110,000. Now, another 10% risk is what? $11,000. This second trade here is another 1:12. So $11,000 times 12 risk to reward ratio. That is $132K plus the initial $110,000. So I'm up $242,000 just by what? Having planning. Now, all this capital, it's not like I funded it initially and I had it. The only thing it started from was what? $2,000 deposit. Now, because I already have a plan, people think risk management is having, at this your stage in trading, if you don't have capital yet, trust me, either you manage to get a profit and part it and get each payout that you can fund into your trading account, or you take risk. Scaling up to 50K is not easy, but since I know I'm skilled enough to do that, and in 2 trades I can move 2K to 50K, I will stick to this plan. It's easier for me to fail at something I've already planned, and it's more understandable that I've planned it and I have planned the failure part of it too. If I fail, it's more understandable than me funding random amount of money and trying to push it up. You notice that at the end of the week, you end up losing more than the 2K that you initially planned out. You can even lose more than that. But if I've planned this out, for better for worse, if it goes well, I make $50,000. If it does not, I leave with $2,000 loss. But at least I know what I plan to do that week. But if you don't have that kind of planning, you find $100 here, you find another $100 here, $500 there. So at the end of the week, you achieve nothing because there's no planning on each deposit that you make. So aside from the technical part of trading, the planning comes first too. Remember when I told you guys that I funded $2,000? I had that plan as of February. Each month, my risk increased. So what I was doing as of February was fund $2,000. I split it into 4 places. Take the first trade, second trade, third trade, and fourth trade, risking $500 each. So what I was doing was, once it gets to $20,000, what do I do? I would drop $15,000. That was what I was doing. I funded the $2,000 first. Excuse me, I'm very, very sick. Sorry. I funded $2,000 first. 25%, I will risk $500 the first trade. If it does well, then I continue risking 25% and 20%. At the end of the week, I'll be upward $20,000 and I will drop 15K. Now, that was what I was doing, and it was working. First trade, because now imagine, this is the main thing about planning. First trade, I did not have analysis for this trade, but just watch my plan. First trade, I lost 500 from inside the 2,000 as planned. Second trade, I lost, this is another 392 plus 94. This is another 500. Third trade, I still lost another. I lost everything down, and the account was what? Down to $300 and something, 383. From this one, there's 3. I took another trade. The account pushed up to 4,000 something. I took another trade again. From that 4,000 something, the account got to what? 8,004. I took a withdrawal of $3,000. Then I took another trade. From then on, after I started having my plans, I stopped taking losses. I took another trade again the next day. Gold buy. I made 11,000. Now this is from $2,000 deposit. The account moved to 17,000. By the end of the day, the account was already sitting at $20,000. Now it was just 3 more trades that brought it to this $20,000. Like I wrote down, 3 more trades. This first sell, the second sell, and the gold buy. That was it. And check my plan. How many trades did I write down that I would take? First, second, and third. I followed my plan. It got there, and my plan said it would go $15,000 after it gets to that 20,000. And what did I do? Immediately got to $20,000. What did I do? I took out my $15,000 like I planned. Like I planned, I took out my 15,000. Okay. So the whole thing with trading is planning. Even if you take losses, but you said I'm not crazy. Please talking, please mute yourself, please mute yourself. I'm trying to talk to the whole plans. So as long as you have that planning, from 2K that I've lost down to $398 or $300, I made back 20K and I would do 15K. Then I wrote another plan again. I followed this. I took the next trade again, GJ. I made 8K. Took another trade again with my plans that I wrote down. I took a loss, and then on this, how much did I lose? Just 1,000 something from inside, because I planned it that I'm going to be risking 15% on this one. The last trade I took the account towards to $18,000. I withdrew was how much? I withdrew the same $18,000 that I took out. In a week, I've withdrawn $40,000 from $2,000 deposit that I lost down to $380. Just because I have what? Planning. So because I've done this the whole of February, withdrawing 18K, 15K, I've done it multiple times. I can now double my risk. So instead of splitting 2K in 4 places, what did I do? I limited it and I split it into 2 places, doubling my chances and doubling my earnings. Now, even if I lose it, I already preconceived my risk. So aside from the whole technical thing, have plans on each week. Every week I enter, I write a new plan for any deposit that I make. Every new week I write a plan. You can see this is 2K, see why I marked it, new week. So aside from technicals, have planning. So each loss I take, I'm not surprised because I planned the loss. Each profit I make, also not surprised because I planned the profit. The only thing that can surprise me is if the risk to reward ratio happens to be higher, and then it's because I made this an average of 1:6 risk to reward ratio. My trades go more than that, but I'm averaging it to what market can probably present. You understand? But I can take a trade now, and this time I happen to see 1:12. Can see 1:13 here. Can see 1:12 here. This is 1:6 on average of what gold gives me. So planning ahead of time is very important. Leave all these questions I'm asking about this one. All you need is to know is what I've taught, technicals. Then your psychology should be in check when you start doing this thing, when you start having plans. If you plan knowing that if you take a loss, you lose $500, why would you be scared of losing the $500 when you already planned it ahead? And if you're scared of losing it, that means you're not comfortable with losing $500. You should reduce how much you're risking for that trade. The whole thing with trading is planning. If you started, okay, let me just give you an instance. Let's say it's this gold that I took. I did not lose a trade on gold last week. This is the trade on gold. Let's say it's 1, 2, 3, 4. And let's say I actually started with $2,000. And my first risk is to risk $500, and the rest I will start risking 20% per trade. So if I risk $500 here, this is 1:13, right? $100 times 13 risk to reward, that is 6,005. plus the $2,000, your account is at 85. You risk what? 20%. That is $1,700 risk for the next trade here. This one is to 12, right? So 17 times 12, that is $20,400 plus how much? Plus your 8,005. How much do you have? 28,900. This next trade is what? 1:6. Risking 20% of 28,900. That is 28,900 times 20%. That is $5,780. This is 1:6, right? Times 6.8. That is $39,000, 300 profit. So that is 28,800. You're already at $68,000. Now the last trade here is what? First risk to reward ratio. I wouldn't say to risk 20%. Let me just keep it at a risk of 10% for this last trade. Your balance is already at $68,100. If you risk 10%, that is $6,000 risk. $68,104 times 0.1. That's $6,800 risk. Times, how many risk to reward ratio is this? 12. That is, it's $1,000 plus 60,800. At the end of the week, with $2,000, you're ending your trade in $142,000. That is if you plan it ahead. So let's say you already made the exam that you found 2K, but normally your losses are part of the game. But I did not make losses last week, like from the trades that I analyzed on gold. So let's assume this was what I traded. Following the plan that you made already, that you found 2K, split into 4 places. Not everyone can risk as like I can risk, you understand? So you can just say you found 2K, you'll be risking 10%. That's $200. So even if you risk $200 on this first trade, this is what? 1:13. That's times 13. That is 2,006. Plus the 2K that you have, that's 4,006. If you say you want to risk 10% inside the 4,006, that is $460 risk, Abby. $460 risk times how many risks to reward? 12. That is 5,004 plus 4,006. The account's already at $10,000 from these two trades, from risking $200 on this first one and risking $400 on this second one. Planning, like, no, it's not more, it's nothing else more than that. Have the strategy in check. Have the plan on how to trade your deposits. Then write down your plan. With this plan I already wrote down, I already know that I'm not supposed to be trading more than 3 times in a week because you see it, first trade, second trade, and third trade. First trade, second trade, and third trade. So I already know that in a week I have 3 trades. If I take my first trade and it's a win, my second trade is a loss, my third trade is a win, I'll go. If I take my first trade is a win, second trade is a win, third trade is a win, I'll leave. First trade a loss, second trade a loss, third trade. That is in a span of 1 week, 3 times that I will trade. I already wrote down the plan, so it's already preconceived. There's nothing will surprise me in the market again. So aside from getting a working strategy, write a plan on how to trade each deposit that you make in the market. Any deposit you make, write a plan. That will prevent you from depositing every amount you have. Most people are depositing $10, $5 inside. Not because that's what they can afford. It's because they don't really blow their own money. Somehow, 10K enter their account. They find a way to complete them 15K. They fund inside their X-nest. Now ask yourself, that money that you just deposited, what's the plan for it? What can you actually amount? Trust me, any deposit you make like that, you will probably end up losing it. But if you plan that every week your deposit is $2,000 or $1,000 or $500, trust me, all those petty money that's entering your account, you'll be saving it. You go and the guide until the money completes to fund $500 inside the account. Then you write plan on how to trade that $500. If it's $100 you want to be funding, all those 2K, 5K with the entire account, when you go to try fund the blow, you go keep compound the money until it gets to a specific amount that you normally write down that you fund each week. Then you trade until you've made profit from it and you are comfortable to switch up and scale higher. You write a new plan on how to follow it up. So that's one thing with trading. Planning matters a lot. All these questions. So you guys said everything I said, Abby. How do I get the right lot size? How do I get the right lot size? For advanced class. How you take the do since? Yeah. How you take the do it since? Sure. That's just it. I have nothing more to say and nothing less to say. Any questions again? Come my DM. I'm very, very sick, and this is 9:06.